So to moderate this panel, we have none other than Alan Farrington. Huge applause for Alan, please. Alan takes the stage. He is a Scotsman, and Scotland are playing Germany tonight. Any Germans in the house? Any Germans in the house? Yeah, any Scots in the house? Yes, yes, I love that energy. Okay, next up we have none other than Jack Mallers, the co-founder and CEO of Strike. Jack takes the stage, please. Woo! Here he is. Lots of fans here, lots of fans. Following Jack, we have Rational Roots, the wonderful astrology for men / Bitcoin technical analysis experts. Come on down, the carrots. Round of applause for Rational Root, please. Following Mr. Roots, we have Marc Friedrich, and I'm told that his 7th book is a Bitcoin book, and it's recently become a bestseller in Germany. Huge round of applause for Marc, please. Here he is. Let's go. And last but no means least, we go to France with Alexandre Laizet, who is the digital assets lead at one of the big 4 companies, Accenture. Crazy to see. Big round of applause for Alexandre, please. Alan, the floor is yours. Have a fantastic panel.
Thank you very much, Joe. Thank you very much, all the panelists as well. So we are discussing the future of hard money. To set the scene for this, Marc, I want to start off with you.
Shit.
This will be, I certainly hope, the only question that doesn't involve Bitcoin. I'm going to prohibit you from mentioning Bitcoin, but can you set the scene for us as to why we should want a hard money in the first place? What goes wrong when we do not have one?
Everything. Look in the past, look in the history of humankind, the last 5,000 years. So every empire actually starts with a sound monetary system. And then after time, when the monarchs or the kings get lazy or decadent, then they start like introducing bread and circuses, socialism, and then they have to finance the wars. And actually, the end begins always if you end the monetary sound system, and we see it on every level in the society. You see it with the health system, you see it with art, you see it in the society. So we have a fiat standard, a fiat scam standard everywhere. So that's why we need a hard monetary system, because this is good. You have sound money. If you look at the architecture, for example, in Vienna, yeah, before fiat money, it's beautiful. But now, if you look at the new houses, it's crap, it's shit. And always the empires actually evolve and start and prosper with a hard monetary system. And as soon as they falter, it's always because they end the hard monetary system and they start with socialism and with fiat money. And that's always the beginning of the end. So I won again. But you can prosper a couple of years with a fiat system, but only like 50 to 80 years. Every 80 to 100 years, the monetary system collapses, and then you have to start a new system. And the hard monetary systems are the most important for peace, for health, and for a sound mind.
So it's important.
And I'm glad that the Deutsche Telekom realized that now.
Great, so I want to move along from, I guess, the past now to the present. We'll get to the future in a second. Ruud, I want to come to you. You are well known for a range of really quite amazing, quite beautiful in some cases, charts demonstrating various data analytics of Bitcoin adoption. I think probably the one you're best known for would be the spiral chart. It's a shame we can't put it up. It can't possibly do justice to it, just trying to describe it. But my interpretation of it, I suppose, is that it is demonstrating Bitcoin's monetization. So I wonder if you want to give us some of your insights from putting this together.
Yeah, and thank you for the kind introduction. Yeah, so what the spiral chart illustrates so well is the monetization, but the cyclical behavior of that monetization. And so, because if we plot the price over this 4-year time frame, we can see in the spiral chart the price spiraling outward, and we get a sense of this trajectory of the monetization process. But what comes to mind to me if I think of monetization really, Bitcoin is really a new asset class, and I find that very interesting because we went from a price of zero and a supply of zero to now above $1 trillion market cap and 90% of the supply being mined. And so, well, I look at Bitcoin mostly from the perspective from on-chain analysis. And my observation is that, and I find this interesting related to this monetization, is that in the first 12 years, basically the first 3 cycles of Bitcoin, we had a very high inflation rate in Bitcoin because 90% of the supply got mined, and but we had a relatively low market cap, and so the price could be pushed up with relatively low amount of capital up and down pretty easily. But actually, with so much supply coming to the market, Bitcoin was actually becoming more abundant. And because we can look on chain at the active supply, and so that is a fairly objective measure of the coins that actually participate in the price discovery. And if we look at that, we see up and until the third halving that Bitcoin was actually becoming more abundant. And so I like to call the first 3 cycles of Bitcoin kind of the initialization phase. But since soon after that third halving, we've reached the stage now where we are at $1 trillion market cap, 90% of the supply being mined, and especially since the fourth halving, now we went with the inflation rate supply issuance below that of gold, and so those are really significant events. And if we look at the active coins that are participating in the price discovery. And we often think of this, if we think of the Bitcoin supply, we often say like, oh, Bitcoin has this fixed supply cap, we have only 21 million coins. And so everyone is competing for a piece of those 21 million coins. But if we look at the data, actually, so that the first 3 cycles, that wasn't really true. Bitcoin was actually becoming more abundant. But now we have an active supply of around 12 million coins that participate in this price discovery. And so we really reached this new stage for Bitcoin as a mature asset. And we also can see this now with ETF approval. And so I think this is a very exciting stage because everyone now starts to compete for this active Bitcoin that is still out there. And so I think that's a very bright future for Bitcoin.
Jack, I assume you agree with this context that Bitcoin is monetizing. It would be quite the scoop from this conference if it turns out that you don't. What is it like running a business that is predicated on this more or less historically unique phenomenon?
It's such a good question. You asked it a long time ago, and I still am up here thinking of an answer. I think my favorite answer is, as a new asset is monetizing, it's surely demonetizing other wealth. And so the way I like to talk about Bitcoin is the best expression of fiat debasement. Bitcoin is a put option on the existing system. Bitcoin is long volatility. It's your bullish chaos in the existing world. And so I sell a product to people that are bullish chaos on the existing world. So I'm more or less inferring that the world we live in and the wealth that's stored today is fucked. And I sell you a way to get out of it. So I guess the answer is, thank God I was as young as I was when I started it, or else I'd be dead. It wasn't fun in my early 20s getting an email from the IMF. But I would say that's probably the most interesting part, is that it's a volatile business to run. It's a volatile lifestyle to be right in the crosshairs of selling a put option on the existing system, selling someone long vol, selling the expression of currency debasement, even if you're in New York City. That's probably the craziest part.
You're going to use, what was it, bullish chaos, new strike slogan.
Yeah, there you go.
Cool.
Put it on a T-shirt. Where's Dylan? There you go.
All right, Alexandre, you're our mole in TradFi. So the community thanks you for your service. What do the suits make of all of this?
Yeah, sure. So thank you all for being here. 3 points. Bitcoin is emerging as the best store of value in the world, and institutions are realizing that, and fast. Second point, it is also emerging as the best medium of exchange, and it will take more time, even if store value is the most important, and it's what differentiates Bitcoin from all other assets in the world. And third, it emerges as well as a unit of account. For Bitcoiners, it is already the case. Bitcoin is remonetizing the world, is repricing the world, and Bitcoiners live on a Bitcoin standard, and soon enough, institutions will live on a Bitcoin standard. And there will be Bitcoin institutions. Every institution that adopts Bitcoin become Bitcoin-oriented and will be influenced by Bitcoin as well. So on the first point, Bitcoin emerges as the best store of value. You have seen, of course, the Bitcoin ETFs, 50 billion of inflows that cannot be unseen. And institutions have completely shifted, with now 85% of American and European systemic banks allowing and opening access directly or indirectly to Bitcoin, and moving from experimentation to now deployment of solutions at scale. So now when you are an institution, you don't want basically to be part of the 15% that are not adopting this new technology. The second point on this part is that we are crossing a major inflection point. Now we have 300 million, 500 million of people in the world using Bitcoin, and those people are also in the institutions, by the way. We are going to 1 billion people, to 2 billion people. And for a bank, what this means is that now you have 10%, 20% of your user base that is completely using their deposits to move them to Bitcoin. And when you have a fractional reserve banking system, that can cause an issue, a business issue, and then a risk issue. And then there is a business opportunity. I believe that institutional adoption of Bitcoin is good for decentralization, because as much institutions as you get all over the world, in different countries, you get different interests, and of course, everything is good for Bitcoin. So for banks, what we have observed, a situation 2 years ago, was that there was a big focus on experimentation and tokenization. Well, now, after BlackRock, banks have realized that now 70% of the business value for financial institutions by 2030 is on Bitcoin and crypto assets. And what we see emerge, and what financial institutions are realizing, is that within crypto assets, maybe Bitcoin is different. And Bitcoin represents maybe 50 to 80% of the value. Now, when financial institutions in Europe launch ETP products to access crypto assets, and they launch a Bitcoin and an Ethereum ETP product, 80% of the flows goes to Bitcoin. Okay? So when you have 80% of the value that go to Bitcoin, maybe you want your financial institution to focus more of your time to Bitcoin. So this store of value growth make also the case for the emergence of the medium of exchange. And thank you, Jack, for pushing the case with Strike, big leader in the space. The medium of exchange shouldn't undermine the reserve of value case. Why? Because we have 21 million fully decentralized, fully secure blockchain with Bitcoin, that we can have a secure and decentralized medium of exchange. And the medium of exchange, people completely underestimate the potential. There has been a great study by River showing that Lightning has had a growth of more than 10x between 2021 and 2023. What this means, if we continue to this rate, we are going to, we went from 500 million transactions, 500K transactions to 6 million transactions. If we continue at this pace, by 2035, we will have 6 trillion transactions happening on Lightning. For a comparison, Visa is processing 200 billion transactions. And if you multiply with the $10 average price of a Lightning transaction, you get 60 trillion, okay? And that compared with Visa at 10 trillion today. So it's a 5x to 10x of what Visa operates today. And by the way, it may be Visa that operates Lightning and facilitates Lightning. So maybe as a closing point of this, I would say that it's not a zero-sum game. And it's not because institutions are coming that it's bad or good, and it's a tool that works, and it's being adopted by institutions. And last, to finish, on the unit of account, institutions will use Bitcoin, and Bitcoiners will use products of financial institutions, and there will be arbitrage between different assets because people realize that it's not worth to go back to fiat anymore. So you are just arbitraging between an asset and another asset. So there will be an emergence as well of fiat coins emerging, issuing on top of Bitcoin layers. And I believe that over time, even the tokenization use case will flow on top of Bitcoin and create more value around the Bitcoin ecosystem. So institutions are coming, and it's good for Bitcoin.
Nice. You mentioned... Well, everything's good for Bitcoin.
Exactly.
You mentioned ETFs a couple of times. I do want to guard against the whole panel getting derailed onto an ETF discussion. Mindful also that there's probably a really interesting breadth of opinions and perspectives on it. I do want to quickly touch on Root. You've fairly recently, I think it's the newest addition to your portal is the ETF tracker. I suppose more with a perspective on monetization and what it tells us about Bitcoin than just ETF good or bad, if you have any insights.
Yeah, so if we think of worldwide, ETFs now have about 1 million Bitcoin. The bad thing about that is that most of those are in custody. And so, but we cannot really expect from the traditional system to immediately understand the importance of self-custody. And so, as each and one of us, we have made many mistakes as well when we entered Bitcoin. And so it's also true for obviously institutions and people that come from more TradFi to invest in Bitcoin. They make the same mistakes. It takes a cycle to learn. And so, but it's very positive. I mean, we had one of the best ETF launches, and so I think that is very good to see. I personally didn't expect such a good launch because people are not immediately gonna invest that much into Bitcoin. But now institutions are starting to get their feet wet, which I think is very positive. And I think now what is important is that the track record is basically starting now. It needs a couple of years to be able to see Bitcoin perform in these portfolios, and so institutions got more comfortable with allocating more. And we see that process happen. We have now state pension funds investing, and so that is very positive. And the first ones are starting to appear, but many will follow, and many derivative products will follow. And I think it's good for Bitcoin. As I said, we cannot expect from the fiat traditional system to understand self-custody, and so it's our responsibility to demand also from these ETF products that they keep on continue to apply more of the Bitcoin ethos. For example, we have had Bitwise. They now have proof of reserves. And I would assume some like Fidelity will follow at some those footsteps. And even redeemability, I think, is possible. We have had it with gold ETFs before as well. So I hope we'll see, Bitcoin ETFs as well have this redeemability, or even multi-sig custody solutions. That is all possible, but we all need to work on this and demand it from the ETFs and keep on educating them as well.
The question is, of course, if the Wall Street is into Bitcoin because they want to make a quick buck, or if they're into it because of the philosophy. And I think they just made a decision to embrace the enemy because they know it's superior. And I'm not so positive about the ETFs, to be honest, Ruth. I think there's also a danger. For example, if they have more than 1 million or 2 million or 3 million Bitcoin, they can manipulate the price anytime. Yeah, even if Michael is selling his Bitcoin, it has impact on the price. So if they, for example, have a coordinated project and say, okay, let's dump all our Bitcoin and then we can buy it cheaper, it's possible. And I don't trust them. I don't trust the Wall Street because that's actually the enemy we have. They are the supporters of the fiat scam, and they saw, okay, Bitcoin, we can't cancel it, we can't censor it, we can't prohibit it. So let's buy it. Let's buy it and perhaps destroy the system from inside. Perhaps I'm wrong, but I'm open for discussion, so I'm not that positive about the ETFs.
I disagree with that.
It's okay. It's okay. That's why we're here, Jack. That's why we're here.
Take this one.
Do you have an even more bearish take?
Well, no. What are you scared about? They're going to manipulate. What are you scared about? I think the ETFs are good for Bitcoin.
Yes, for the price, it is. But we both know they're not into it because of the philosophy, or they're for free money or for decentralized monetary system. They're into Bitcoin because they want to make money. That's it.
Yeah, but a really important property of Bitcoin is that it's a permissionless system. How do you know what I'm in Bitcoin for? We just met like 10 minutes ago.
You're definitely into it for a quick buck. I know that. You told me just back there.
Well, I guess my point is it's no one's gate to keep.
Yeah.
They could be in Bitcoin for whatever reason they want. Is the system designed well enough to be resilient to any nefarious actor or malicious activity? I disagree with the notion that you can get 1 million, 2 million, 3 million coins and manipulate the spot price. You need a lot more than 10% of the supply to manipulate an asset that is sufficiently distributed. I think people make a false equivalation to gold. Like, the comparisons to gold really piss me off. Like, don't compare me to your defunct piece of shit metal that didn't work. Like, I don't know what we did to deserve that comparison. It didn't work. Meaning that gold naturally centralizes. And so it's easy to manipulate a metal that all the central banks hold. It's like that's not lost on me. Whereas Bitcoin, if Satoshi Nakamoto went to Goldman Sachs and said, hey, I got this new currency and I'd like to take it public on the NASDAQ, well, then maybe the supply of Bitcoin would be concentrated enough between Wall Street where they can manipulate it. But the fact that the guy put it on an email thread and walked away, all the supply's gone. It's all of it's gone, and it's already distributed. And when you look at these on-chain type metrics, and you see that the supply on exchanges is at an all-time low,
yeah,
you're making an inference that people are holding this thing physically. So I think it's long gone when someone can manipulate the spot price, and I don't think people should be able to use Bitcoin for any reason. It's the same thing when someone said you can't buy marijuana with it on the Silk Road. It's the same, do whatever you want.
Bitcoin doesn't judge anybody. Everybody can buy Bitcoin. That's a great thing about it. It separates the government and the monetary system, and it doesn't matter if you're in Indonesia or in Finland, if you're gay or not. Everybody can buy Bitcoin. That's a great thing about Bitcoin. But okay, who was that? Anyhow, I talk to family offices. I talk to fund managers, and I know they are not into it because their heart is into Bitcoin. Perhaps here, Dirk from Deutsche Telekom, yes, okay. But we have to educate them, and we will see how it works out at the end. I just want to bring it to discussion that I think we have to be careful. And of course, Wall Street can buy Bitcoin, and they do it. But don't you think it's odd that Larry Fink switched so fast from, okay, it's poison and it's the plague, we have to ban it, to, oh, it's the best asset ever.
Totally, but so did
that is the game theory at play. Bitcoin is very well with this game theory, and so many of us came for the gains, but stayed for the actual asset. And so I think with institutions, it's no different. They come for the gains, and they're incentivized. But that is what Bitcoin does. And so once it's part of their portfolio and it starts to have a good effect on them, they're going to be incentivized to learn about it more, and then they're going to see the value. And so
if I may add,
sure.
I agree with both of you. I agree with you on the fact that we should always reiterate that not your keys, not your coins.
Perfect.
Okay? If you don't have your keys, you don't have Bitcoin. You have an IOU. So that's the first thing. However, I would strongly disagree with the fact that an ETF per se is bad. In the same way that Bitcoin per se is not bad. It's a tool, and it's a good tool to onboard people. And in fact, Bitcoin should win in the free market, and Bitcoin self-custody should win in the free market. And we need Bitcoin educators for that. However, the free market has also spoken. And when you look at the Bitcoin ETF flows, you have 80% of the flows that come from retail today. And this means that these 80% of people have decided that it was a good option for them. And maybe it's not all of their stack. Maybe they have 90% in self-custody and 10% in a Bitcoin ETF. And it's their decision to make. And if they make it, it's because it's good for them. And maybe they will change over time. So I believe that overall, while we should have a parallel system that is being developed and provide self-custody tools and uncensorable tools, we should have as well, we should build bridges, and Bitcoin ETFs are a very good bridge to onboard both institutions and retail investors. And we should also remind that behind institutions, you have retail investors as well. So overall, I would not say that Bitcoin ETFs are bad, and I would say that I would also nuance the fact that people are only here for the gains. First, it's not bad to be here for the gains. We all want to raise our family and to have Bitcoin appreciate over time and to maintain our standard of value of living and even increase. The second point is, however, that in my experience with digital assets team at financial institutions, at corporate, people do care about Bitcoin and they do care about freedom. And if they came to a digital assets team, if they came to an innovation team within a financial institution, it's because many times, I would say most of the time, they care about freedom, and it's just a learning curve. Everyone was not convinced about Bitcoin because before we became convinced. So it's just a learning curve, and people at financial institutions, there is a bit of a contradiction today, because you have Bitcoin that represents 50% of the market, and then you have 90% of the time of digital asset team that is dedicated to Ethereum. And it's understandable because they came for the programmability, they came for the functionalities, and we should distinguish between the asset and the technology. Even if the technology is interesting, the best asset is Bitcoin. Okay? So I believe that over time, thank you. And I believe that over time, what we will see and what is underestimated today is that Bitcoin will eat the world, will eat finance, and we will go from today 0.1% of global capital to 1% to 10%, and even 30, 50% if we listen to Baker Saylor. But what this means is we are having today 1 trillion market capitalization. We will go to 10 trillion, we will go to 100 trillion, and we will have Bitcoin, and we will not be able to prevent people from issuing other assets on top of Bitcoin. It has already started with ordinals, it has already started with other financial assets that are being issued on top of Bitcoin. And for example, and this relates to the topic of today, future of hard money. In fact, when you have Bitfinex securities, when you have Blockstream and Liquid, for example, being used to tokenize assets on top of or powered by Bitcoin, this is also good for Bitcoin because you are bringing finance, you are bringing financialization to Bitcoin without using assets that could be manipulated and that are not hard money. It is much better to have finance built on top of strong foundations underpinned by Bitcoin than to have financialization happening on top of sand. So even if we should be nuanced and there is good and bad in financialization, we should always remember that before being Bitcoin maxis, we should be freedom maxis. And Bitcoin should win in the free market.
I have to agree. Perhaps there is also a big chance with the ETFs and with Wall Street, because in the past, in the last 5,000 years, to establish a sound monetary system, you always needed chaos, anarchy, war, revolutions before. And perhaps it's the first time that the freedom technology and the peace technology, Bitcoin, we don't need a war or a revolution. Perhaps this is the reason why Wall Street is important, that we have a peaceful transformation from an unsound fiat scam to a sound monetary system. And I hope we definitely achieve that all together. And this is the big chance we have, of course, perhaps this time without any chaos or anarchy.
Yeah, guys, we've talked a fair bit about different flavors of institutional adoption. I do want to move it on, though, to something maybe a bit more optimistic, hopefully a bit kind of truer to the spirit of Bitcoin. I'll just open this up to whoever wants to ask it, but can you picture a future of hard money that simply has or requires fewer institutions in the first place, right? How will people use money, or what will be different about how people use money post-hyper-Bitcoinization, say?
We will definitely have less mall investment, which is now incentivized by the inflationary system. So I think that is we will get quality products back again, and so less companies, but better quality products.
Like you asked me at the beginning of the panel, it will be a better world. We have better food, we will have better architecture, better politics. Perhaps we don't even need politics anymore in Texas. So I think a sound monetary system leads to a better, more healthy society, and a clearer mind, of course, as well. So it's actually the foundation of an orange future.
What I would like to add maybe on this would be that there is a strong debate today in terms of store of value and medium of exchange. And the debate is always, well, medium of exchange cannot happen because bad money chases good money. Because you always want to spend your money that is inflationary and you want to get rid of your fiat currencies and keep your Bitcoin. But in fact, I believe that this is a bit theoretical. Because in fact, when you live on a Bitcoin standard and you have your wealth stored in Bitcoin, when you spend fiat currencies, you are also spending your Bitcoin. Because you are spending your capacity to acquire Bitcoin. And in some way, Bitcoiners already live under a Bitcoin standard, and they are able to maintain their standard of value. A quick anecdote I would like to make that I find funny is I was at Plan B Forum last year at Lugano, and I bought 300 euros of Bitcoin to spend there over the weekend. I only spent 200, and now it's back up to 300 euros because Bitcoin appreciated over time. And in Prague, I use this as well, and I expect to use this over time. What is very good is that when you have a money that appreciates over time, first you value more your future, and this money is like a power for you to grow and to have entrepreneurship in your life and to have more projects. And I would say that the only thing that we should remember that is always more valuable than buying Bitcoin is investing in oneself. It is why Tether, for example, instead of just buying Bitcoin, they also build Bitcoin mining facilities. Because building Bitcoin businesses is contributing to the success of Bitcoin, and by doing that, you are contributing to the success of your wealth as well. And I think we should always remember, and that's why there is a lot of VC companies that are emerging in Bitcoin only, because they believe that by investing in Bitcoin companies, you will have higher returns because they will be based on a Bitcoin standard. So you will have the returns of Bitcoin plus the returns of the company. So I don't believe that Bitcoin will just eradicate companies in the world. It will just empower them to go beyond and to reach new services that are productive for society. So I would say there is maybe a very positive view to have on this front, with Bitcoin emerging as the standard store of value that enables new businesses to emerge under a strong foundation.
Open question again, whoever wants to take this. What do you think are the biggest challenges to ensuring that we stay on the path to this future? What are the biggest risks that we go off piste and we don't make it?
Biggest challenges? The biggest challenge, I would say, and maybe to nuance my own argument about institutional adoption, is that there is a risk, and we should think about how to mitigate it. There is a risk of Bitcoin becoming the internet, which is good, but also having the dark web equivalent. So there is a risk of, in 10 years, 15 years, having only the ability to really move your Bitcoin between an institution and another institution, because 90% of the Bitcoin is through different types of custodian models. And in this model, it would be very easy to say that the 10% of the people that are using self-custody options are illegal or criminals and such things. And we see that developers are put in jail, and it's starting. And I think we should think carefully about how to mitigate these risks, and how to protect the developers, and how to make sure that also regulators can get up on the learning curve to make sure that Bitcoin is not seen as as a threat, rather as an opportunity, and that Bitcoin, the technology is protected as a right as well to self-custody and such kind of things. So I think it's important to constructively and cheerfully engage with regulators, with institutions, and make sure that while we do Bitcoin institutional adoption, we don't, we don't make a world of impossible self-custody and impossible censorship-resistant payments.
I mean, I don't know if I agree with that too much, because I think that implies, I just don't like implying that we need regulation or we need companies to stop being really successful for Bitcoin to be successful.
Yeah.
My answer would probably be, I think of Bitcoin as the most pure human market in the world. It's one of the only free markets left. And I think the open question is, can humans collaborate in a distributed manner peacefully? Like, I've been in Bitcoin 11 years, and the scariest times were when we almost, like the block size wars, for example. That was times when I thought, like, holy shit, this thing might not work, but that came down to human conflict. And so, like, we are coming off the last century of war, right? And so I think of, Bitcoin without humans is just unused software. Like, we are Bitcoin in the most pure form. And so I think the question is, are we going to be able to come to peaceful resolutions and distributed consensus as human beings? Like, if the dollar hegemony fails, are humans going to be able to be civil with each other and not break the thing that is Bitcoin? Because I've just been around and we've almost broke it a few times. And so it's been resilient at this point, and I don't want to advocate as if I live with this fear in the back of my mind. I don't at all. But I think that's more the risk than like a regulation or something like that.
Yeah, I think you're right. I agree with you right there. I think the big risk is that the fiat world starts a war to get rid of the debt and perhaps rid of some people. I think another chance or also a risk is perhaps that, for example, the US adopts Bitcoin and tries to save the world currency reserve status when they say, okay, we've got Bitcoin and our dollar is backed with Bitcoin. Perhaps this is a chance or a risk we will see, but I agree with you, the hegemony of the US is faltering, definitely faltering, and sometimes if you're desperate, you just do wild actions, and we will see. But I think a war is definitely one of the biggest threats for Bitcoin.
What you almost always see is these things end in some world war, which is super unfortunate. I think the optimistic side is Bitcoin is the only, I think you said it, peaceful hard money revolution. There's a technical reason as to why that is. It's because proof of work it's electric. It's not kinetic. So like if you were to physically enforce something like the gold standard, I would physically enforce that by putting a gun to your head, right? But we can physically enforce Bitcoin's consensus rules with electricity, with energy. And you can't harm, like, that's not murderous, right? You don't see blood with that. And so I think that there's a lot of reason to believe that Bitcoin promotes peace in this way. If the world were to fall apart and everyone's like, well, everyone in the world that has wealth has gold, it'd be very hard for me to hide the gold from the world so that they know or don't know that I have all the money. That's when things get physical. Is I know that guy's got gold. I've seen it in his house. I'm going to go put a bullet to his head and take his gold. The fact that I can put wealth in my brain, it's weightless, it's invisible, and to enforce the protection of my wealth is not kinetic, but it's electric, means there should be theoretically no blood. And so that's the optimism, that's the whole innovation of Bitcoin and why it's allowed to be peaceful, is the physical protection is electric and not kinetic, right? Yeah.
We can opt out before we get to the end stage, hyperinflation.
Yeah. Well, we're pretty much at time, and I think that is a nicely optimistic note to end on. So thank you guys so much.
Thank you.